All right, good morning. Let me get a refresh on the coffee and then we'll get going. All right, how are you? All right, I got to pull up the chat. Un momento, por favor. I thought I had it up. Then, oh yeah, there it is. I do have it up. No, I don't. Yes, I do. All right, hang on. I got to move that. All right. Yeah, I think we can go. All right, let's do it. Good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So welcome, welcome, welcome. What do you want to do today? Technical analysis, fundamental analysis, or how about both? Why don't we do both? So my plan today is I have three central bank reports in front of me, and I could probably actually need to pull up a fourth one. So we could do that, and I'll give you those resources. We could look at some of them and so on and so forth. So that's the fundamental side. And also, if you post at tradeplans.ai, I will review your trade plan today. So make sure you do that. So that'll be the technical analysis side where I give you feedback on your trade plan. Very cool. And with that being said, we will get on with it, but I do want to thank you for being a subscriber. I believe Forex.Today makes the world a better place. There's some other resources available. Where's the actual, let me, youtube.com/Forex Today. Boop, boop, boo. Hey, isn't that weird? That's us right here. So, isn't that weird? That's us right here. Neato. I want to point you to some resources. Cool. I can expand this out. Cool. First of all, I'm doing a Q4, fourth quarter outlook. We're going to go through economic indicators, dozens of them, to try to discern what we're going to do in October, November, December to make money, 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 money. So if you click on that link, bring you to this page here, it's a whopping $10. Okay, so that is Wednesday the 27th. That's less than a week away. Here's tradeplans.ai. This is what we're going to use today. Let me give you that link. So you upload a trade plan and you'll get feedback. So I'm going to go through trade plans today. So we'll go ahead and post yours now. It's pretty simple. You can do stocks, Forex, futures, and crypto. So if you want to do a Ripple, right, XRP, for sure. So make sure you do that. Like literally, I'm going to go through these trade plans today. So upload your trade plan. It's free, by the way, free. There's absolutely no monetization at all. Cool. How about this? This is a cool resource. 3 trading secrets that may triple your profits without changing your indicators and while spending less time at your charts, and how to do all 3 trading secrets for free. That's cool, right? So check that out. Lovely. It's actually very good. I think you'll enjoy it. Investor Bootcamp, you probably already know about. It's $88 a year. It's amazing. How about Trader's Way? If you need an ethical and trustworthy foreign exchange broker, I recommend Trader's Way. I've been working with them for, I don't know, eight years. It's got to be 8 years, maybe 9. We're going to talk about the Swiss National Bank today. Well, the Swiss National Bank helped prove the Trader's Way is ethical and trustworthy. They surprised the whole world 8 or 9 years ago, shocked the world, and brokers, big brokers, got caught trading against their clients, and they went out of business that day. Trader's Way was perfectly fine, which is proof to me that they don't trade against their clients. Cool. And by the way, if you want a free, how about this? You probably haven't done this one. Free training course on Forex. You want to start number 1. I'll post that there for you. All right. So S&P full of surprises. Yeah, that's what I heard this morning, that they surprised the world. How many people here heard that the Swiss National Bank shocked everybody today? How many people have heard that in their news feed or their news reel or their TV or newspaper? How many people heard that today's Swiss National Bank decision was a shocker? Yeah. Yeah. Well, here's what it is. Okay. And the bottom line, is it going to take me or what? The bottom line is they didn't raise interest rates. They paused. And apparently this was shocking. So members of QuantBox know that it's not shocking at all. In fact, we've known for months. QuantBox has been saying that there was 0% chance, zero, not even 1%, 0% chance that the Swiss National Bank would raise interest rates today. 0% chance. And yet the world is shocked. Holy moly. I was shocked that people were shocked. Yeah, Kareem's like, yeah, and I talk about it. I talk about it a lot. I talked about it months ago. We went through all of that. In fact, let's say 2 months ago, I can't remember how long ago, we talked about it and I showed you my outlook for next year. Next year. And people were shocked about this one. So it's kind of like, I'm not trying to say I'm right. I'm just trying to say I'm shocked that people were shocked. I just have facts. I only have facts. So I assume everybody has the same facts. I guess they interpret it differently, and we're shocked. So anyways. Look how cheap this set is, huh? Look, it's so cheap. So actually, I'm going to leave this here because I want to read it. Or I want to watch it, I mean. Cool, neat. Anyway, so yeah, they kept interest rates the same. If you want to, I do cover it in today's QuantBox video. I guess I should pull that up. I think it's here. Well, hang on. youtube.com/@QuantBox. Yeah, anyway, so I do mention it here if you want. Yeah. Cool. Le fletulumum. All right, so let's get back to the fundamental side. And I'd like to remind you that we're going to do technical analysis today, so upload your trade plan to tradeplans.ai so I can review it with you. All right, so this is the actual FOMC statement. I'll give you the link to that. I know, so many links, I know. Two minutes. Okay. Recent indicators suggest that economic activity has been expanding at a solid pace. Okay. Job gains have slowed, but remain strong. The unemployment rate has remained low. Inflation remains elevated. The committee remains highly attentive to inflation risks. Okay, so now where's the next one? Here it is. Okay, so now you should go through the summary of economic projections. These are the dot plots. By the way, let me ask you, have you read or heard, depending if you listen to podcasts or watch TV like the monitors behind me, or maybe you do your reading, but have you come across debate whether the Fed is going to raise one more time? Or is the Fed done? How many people here have heard opinions that the Fed is done raising interest rates? How many people have come across that opinion in the since the Fed meeting? Anybody? No? All right, cool. So that's good then, right? Oh, a few just today or tomorrow. So here's the thing. So let's say this morning I was listening to Bloomberg Radio, and they had 2 or 3 different guests that gave their opinions. Some thought that the Fed would raise one more time. 1 or 2 said they thought they were done. Here's the thing. This is the summary of economic projections. Here are the 19 voting members. No, I shouldn't say voting members, members of the FOMC. 19. Of the 19, 12 say one more hike. 7 say 0 more. So when I hear this morning from a credible expert that they think the Fed is done and that we've hit peak interest rates, why would they even say it? Why would they have an opinion like that? I don't even understand, why would you have an opinion? Because what they're saying is, this is what I think I would do if I was in charge in the Fed. That's the wrong question. What do we know? See, this is what I keep training you. This is how I train you to think. What do we know? Not what would you do if you were in charge of the Fed? That's irrelevant. The Fed dictates interest rates in the United States, in particular, these 19 people. So, if somebody asks me, so what do you think, are we at peak interest rates, or is the Fed going to raise 1 or 2 more times? I'll say, well, according to the summary of economic projections released by the FOMC, 12 members say that there's going to be 1 more rate hike this year. They're going to vote that way. Seven say pause. Oh, that's it. The majority have told us factually there's 1 more rate hike, not 2. There's no cuts this year. Remember, there was a time when people were pricing in cuts, which was foolish and negligent. And now people are telling me the Fed's done. And I'm like, how do you get to that conclusion? Can the votes change over time? Of course they can. So then, Frank, you would have to get, members to say no more cuts. Okay? You need 4, 5, 6 people to go from 1 more to 0 more. So what would need to happen, Frank, to get that many people to change votes by the next meeting or two. Now, I think the next meeting is the rate hike, and that December they don't. So what would need to happen? Well, let's just say CPI, that's the inflation gauge that everybody knows, would need to fall drastically, right? Or NFP would have to fall drastically, don't you think? Like a lot, not a little, but a lot, shockingly down, to say, oh my God, we don't need to do any more. The prices are collapsing. The job market is collapsing. What they talked about in the report a lot is basically the lagging effects, the lagging effects, the lagging effects. But like the job market's still good. And what they're referencing there is the Taylor rule. So anyway, so there's a couple of, you have to read between the lines a lot. But nonetheless, to get these members to vote, I mean, think of it. They already have the data. They've already thought about it. They know the trends. So a trend here would have to collapse for them to say, oh my God, I'm wrong. I didn't see this happening. This is shockingly bad. I need to change my opinion. Okay? But I think that's highly unlikely. It's possible, right, Richard? Or no, Frank said this, right? Yeah, so can they change? Yeah, but the data would have to go from good, not from good to neutral, but good to bad. Okay? And I don't think that's probable. So what do we know? Okay? How about next year? One person. Okay? One person says one more hike, but it won't be until next year. And 18 says no hike. So we get to hear like, well, I'll have to go with the 18 and say no hike next year. And I'll have to go with the 12 to say one hike this year. So I don't have an opinion. So what I would say if I was on Bloomberg, I would say, well, according to the summary of economic projections released by the Federal Open Market Committee, 12 of the 19 say that we're going to raise interest rates one more time this year. And then 18 of those members say we're not going to raise next year. So according to all the research and then therefore opinion, research-based opinions at the Federal Open Market Committee, which makes the decision, we have one more hike this year and none next year. So one more rate hike and we're done. I don't have an opinion. I only know the facts. So if you watch the QuantBox video from today, I discussed something similar for the Swiss National Bank. I discuss why the Swiss National Bank will not want to raise interest rates. Okay? So 2 years from now, interest rates are probably going to be around 4%. Three and a half to 4. Next year, we're probably going to, according to this, still cut. Remember, that's what we expected. This hasn't changed. This is similar. Now, there are some more, people have moved their votes, but the aggregate is the same. One more hike and we're done. This was our opinion and QuantBox opinion 6 months ago, 8 months ago. So we're still on track. And then next year, 2 cuts. Probably, right? What's the chances we're going to... And you're like, Wayne, I don't know how to read this, okay? All right, so if we raise to this interest rate level, which is 5 3/4, one person says we'll keep it there for a year. All the way through next year, I should say. All through 2024, we'll leave it there. And then, in fact, it's probably the same person that says, we'll leave it there for 2 years. 2 years we're going to stay here. 3, okay? 4 members think we're going to cut once next year. Another 4 says we're going to cut 2 more times next year. Okay, you see how this works? 4 more say we're going to cut 3 times. 3 say we're going to cut 4 times. And 2, we're going to cut 5 times next year. And 1 says raise. Oh, All right, well, that's... How do we do this? How do you, right? Well, let's remove the outliers. Let's get rid of, don't even consider the high, don't even consider the low, and then let's average this out. Okay, I'll get rid of this too. All right, so now we have 2 here, 2 here, so you get rid of the 3 low, right? So, 2, maybe 3 cuts. So not a lot changed there because, like, for example, QuantBox has them cutting in the 3rd and then 4th quarter of next year. And QuantBox has had that for several months. So I don't think it's going to change. So why is the dollar strong today? Well, I'll let you do your own research here, but I'll point you in the right direction. Again, this is where you can get it. Okay, I want you to look at this. The distribution of participants' projections for the change of GDP. 23, which is this year, 24 next year, 25, 26, and then the long run. Look at this. We're all right. And then the next thing you want to look at, the same thing for the unemployment rate this year, next year. Okay. And then PCE, which is inflation. So we have GDP, we have jobs, we have inflation. Okay, and then you can do core, which is stripping out energy. Okay. So the thing is, if you look at this, you want to try to figure out why the dollar is strong. How are people interpreting this? Okay. Or do you want me to just do it now? Do you want it? Do you want me to just give you the answers? Or do you want to do it on your own? Why don't we do a poll? Yeah, let's do a poll. I'm going to do a poll. YouTube is slow today. Wow, there's a real lag. Yeah. Hang on. Yeah. Let me analyze. No. You know what? I'll just do it. I don't even want to do a poll. It's too slow. Too slow. All right. One of the things you want to look at here is GDP for next year. Because we want to see, are there more rate hikes coming or not? Yusuf says it's Windows. Yeah, wouldn't be shocked. I get really mad. My laptop the other day, it really made me mad. Just out of the blue, when I click Google Chrome, my browser on my laptop, I launch a browser and it takes me to Bing. What? I don't use Bing. I never set it to Bing. Just all of a sudden, Windows changed my browser settings to use Bing instead of Google on my Google Chrome. And I think that's BS. Yeah, no, but I think they should be penalized for that. They have, what else are they doing that I don't know of? I mean, like, dude, you can't just change the settings on my machine. Like, that's bad. And I know they've been doing it for a long time, but, right? That's bad. Well, yeah, oh, look, if I was using Microsoft Edge, yeah, then, yeah, Bing. What I'm saying is, it used to be Google. I would launch my Google Chrome and Google would pop up. Because that was the setting I put it on. And then one day it's not. So anyways, I'll get off that. But boy, does that bother me. Okay. All right. So let's look in here. Okay. GDP for next year has gone up, almost double. Their projections now have doubled for GDP. Wow. Okay. It's gone up for 2025 and is the same for 2026. Okay? Okay? Now, when it comes to employment, the Fed says less people are going to lose jobs than they thought in June. Unemployment will not fall. NFP will stay high. Whoa. For next year and the year after. Inflation measured by PCE. Okay. Will be higher. and core. Okay? So anyways, more inflation. Appropriate target range for the Fed funds rate. Okay. See, the craziest of bulls have come down, the craziest of bears have gone up, and right? This is where we are now. And then you can see interest rates are likely to be higher next year than previously thought. And this is sort of like, you can see that there used to be a lot of bears, like a lot of rate cuts next year, and that has moved this way. Less cuts, less cuts, less cuts. Okay? And a chance of no cuts. So that hasn't changed that dramatic. It's just reinforcing that if there are going to be cuts next year, it's likely to be 2. Probably not 3, definitely not no rate hikes. And you know, so there are still cuts. So if we raise to 5.87, so obviously it's 5 3/4, one more rate hike. And then this shows 1 cut, 2 cut, 3 cut. Okay? But I'd warn you, I would have to think about the scenario that would need to happen. And it would be, well, most likely a significant drop in the stock market. That's very disinflationary. It's not going to be the housing market, okay? Or commodities collapse and oil is at $25 a barrel. I just don't really see that. I see it the opposite way. Oil gets so expensive, like 150, maybe 200, which is crazy. We've never been 150 to 200. But let's just pretend for a second that it happens. That would slow the economy. We would have high headline inflation, but we'd have low core because everything would start to cost more, including gasoline. And you would go to your job in your vehicle, fill it full of petrol, that's gasoline if you're American, and guess what? It's going to eat a lot. I filled the Porsche yesterday, $88.88. Yep. So what if it was $111.11? Well, that means I have less money in my wallet to go buy other stuff, let's just say, whatever it is. That's money I spend on gasoline means I can't spend it on wine, or I can't spend it on movie night, see John Wick 7 or something. Like you just don't have that cash to spend on other things. Oh, that's interesting, right, Milos? Yeah, you're right. If gasoline goes up, let's say 50%, that's an extra $44 that I'm spending now. So let's say oil goes way up, gasoline prices go up with it because the number one cost contributor to the price of gasoline is the price of crude oil. The number one. Makes sense. But if it cost me $44 more to fill up gas, my gas tank next year than now, then that's $44 I don't spend on something else. So maybe I cut back on Netflix. Netflix stock falls. Or I cut back on, I don't know, I cut back on something. I just don't have the money to spend because it went to gasoline. And so that can change things, and that can slow the economy. Cherokee says, yeah, and electric car sales go through the roof. Maybe, except America will have a shortage of cars because of socialism. Greg says he bought an e-bike. Aren't they awesome? I was in Rome with my wife and kids, and we rented, after walking around all day, we went out, had dinner, and then at around sunset, and by the time we were done, it was dark. And then we went next door to the restaurant, and there's an e-bike place. So we rented e-bikes, and we drove through Rome at night. And man, it was awesome because the crowds are way smaller at night. So we went, across the, like, let's say, like one of the places we went to was the Colosseum on our bikes at night. And we had seen it that morning, but at night, it's all lit up in beautiful lights, right? And later that night, we're at the Vatican. Now, if you know Rome, you're like, dude, the Vatican's nowhere near, right? Nowhere near the Colosseum. Well, I know. So we're driving down the street at night, all the way. We went all the way, and all of a sudden we're like, yeah, that's the Pope's house, right? That's the Pope's house. And that's the Marriott. And you're like, it's weird. The place is weird. But anyways, so the e-bikes are cool, though. Oh, my God. Yeah, we had such a great time. What a great way to see Rome. Lucas says the EV is not the answer. Well, the thing is, the U.S. auto industry is all in now. All in, which I think could be a huge mistake. And I've talked about it before, where I think it could leave the market vulnerable. Like if you go to the Congo to see what's going on with cobalt, which you need to make your EV, there are big mining companies that produce cobalt, but right next to them, there's thousands of people just digging in the dirt with shovels. Now, it's destroying the environment because there's nobody in control, and the people doing it don't really know what they're doing. They just have shovels. Many of them are kids, because they're like, get out there and go dig a hole and bring back some cobalt. So there's this whole sort of illegal shadow industry in the Congo of people digging in the dirt to get cobalt. Now you're like, so in your mind, you're thinking, okay, you're thinking of a crowd and you're thinking, oh yeah, they're digging holes. No, there's thousands of people. Thousands. It's incredible. Thousands and thousands of illegal miners, just independent. I'm making too big of a deal. It's a dude or a kid with a shovel. And they're killing themselves for some cobalt so you can get in your prissy little Tesla. And you're like, oh, I'm saving the environment. Oh, yeah, you should go to Why don't you go to the Congo and see where the cobalt's coming from? Or go to Ecuador and see where the lithium is coming from and see. And by the way, who's producing? The big miners. Okay? A lot of that is Chinese money, but guess who's buying the illegal stuff? China. Going right out there. And so what happens is some kid is digging in the dirt and he gets some cobalt, and then some adult takes it from him. And then that adult goes somewhere and then sells it to eventually the Chinese. And it goes into an electric car in China. But it's horrendous. So anyways, it's interesting to say, your pure play for the environment and for humanity is driving a Tesla. Well, we got some things we need to work out on that. My problem is, what do we do if there's just not enough cobalt for American cars? What if there's not enough lithium or copper for American EVs? What if it all goes to China because they're out hustling us and willing to do whatever it takes, even if we consider it unethical? That's the interesting thing about ethics. It's personal. If you're Chinese, maybe it's not unethical, right? So they get all the cobalt, but the thing is, now what? American cars, all of a sudden, 10 years from now, the only thing American car companies are making are EVs. And what if we don't have the batteries to do it? Right? All of a sudden, now what? Now you got to go back to the old gasoline, but it takes a while to retool factories. It might be impossible. Now, Lucas brings up, we don't have enough energy now, so if it quadruples, because electricities are powering cars, not just homes. Yeah. We don't have the grid for it. That could be a problem. Yeah. Is that right, Johnny? I'm going to copy that. I'll bring that up in a bit. I'll look at it later. All right. So this idea of we won't have a grid. I knew it was kind of like crossing a line. Like, I wouldn't call them illegal. It's how about unregulated? Okay. So, like, one thing, there's I forget the miner who said this. Was it Glencoe? I think it was the founder of Glencoe, was it? I can't remember. Anyways, a very large miner. The company's been in business a long time. And they produce copper. And he obviously, it's a small business, actually, producing copper. There's not many mining companies that produce copper. I mean, literally, there's 10, let's say, major ones around the world. And by 10, really, 4 or 5 produce probably 80% of every ounce of copper, right? So anyways, he said, there is no more copper. He's like, every source of copper that we know is already being mined, and we're mining it as fast as we can. And every time we take an ounce out, it gets depleted. Like, a mine could just be exhausted. There's just no more copper. But he's like, so we have all of this, and he's like, I know all the other guys, right? He's like, we get together, we talk about it. We're not really competitors because I own this mine, he owns that mine. We're just producing as much as we can. He's like, but we don't know where more copper is. He's like, where am I going to go? Like, there's some copper in Afghanistan. Am I going to go there? No. I could maybe get a mining permit in Russia. Well, that ain't going to happen. There might be some copper in the Ukraine. Well, that can't happen. Well, maybe I'll open up a copper mine in the United States. You're like, dude, are you crazy? That's the most difficult. It'll take 20 years for the American government to approve something like that. So he's like, so forget that. Then he's like, if there's a jungle wherever your copper is, he's like, we know some places on Earth that has copper, but copper's deep in the ground. So you dig a giant hole in the ground, and in those places where there's like tropical rainforest, first of all, you're in trouble because you're destroying the tropical rainforest. But nonetheless, we need electric vehicles. We need copper. So he's like, so let's say we actually get permitted to do that. He's like, we start mining the the copper. We dig a hole in the ground and it fills with water. It's a tropical rainforest. The water tables are high. It rains all the time. And he's like, the mine fills up with water faster than you can dig the mine. He's like, you just can't produce copper there. There might be copper there, but you can't produce it. It's not, I mean, it would, so maybe if copper prices triple or quadruple, then you could figure out how to do it. Some new technology, some new technique. But he's like, by and large, it's off the table. Doesn't make any sense. So he goes back to this idea like, we know where all the copper is. And the other place copper exists are inconducive to, like, you're not going to make 100-year investment in Russia or the Ukraine or Afghanistan right now. So you're like, we can't go there. So, and we can't go to the jungles, and we can't, the United States, it's impossible to open these things. So like he goes right back. All the mines that produce copper are producing copper. So if you want us to produce 30% more copper, he's like, no, we can't. He's like, in 10 years, if you need 30% more copper than we need now, he's like, in 10 years, we're most likely producing 30% less copper, not more, because we'll probably deplete some of these mines. And they don't go forever. Okay? Yeah, well, we'll have to go to scrap and all that, for sure, for sure. But, right? So anyways, yeah, there's going to be a limit to all this stuff. All right, so anyways, there's your FOMC statement. I gave you the link. There's the SEP. I gave you the link. We did the Swiss National Bank. I gave you the link. And then we have, where is it? This one? No, this is the University of Michigan Consumer Confidence Survey. Yeah, this is what we do. This is what we do. Isn't it interesting? You should join Investor Bootcamp. All right, so that's not it. I wanted to do, where is the BOE? That's Swiss National Bank, but maybe it's there. No. That I'm doing later, so I don't want that. Let me check all my other windows. I know I have it, I just can't see it. Is it there? Bank of England? No. Is it here? No. No. I'll close that window. Soybean chart? No. Is on the trade plans.ai. There it is. This is what I'm looking for. All right. monetary policy summary, and meeting minutes. Yay! By the way, please upload your trade plans. If you haven't done it, I'm going to do it very, very soon. You have probably just another couple of minutes before we move on to the third half, the second half. Please upload your trade plan. I'm going to review them now. All right, let's go back to here. The Bank of England's Monetary Policy Committee sets monetary policy to meet the 2% inflation target. That's actually pretty funny. You should see this. It's on their website too. Bank of England. Central Bank of England. Okay. It's right on their homepage. Yeah, look. Target 2, current 6.7. And the amazing thing is that's way down. It was like 7.5 and it dropped to 6.5. You're like, it's crazy, but interest rates are only 5%, right? 5.25. Next meeting's November 2nd. But inflation is still there. So, right? More than triple their target. So anyways, it's funny. I think they've done, what, 14 increases? No, you have to look at core, Richard. Okay? The MPC voted by a majority of 5-4 to pause. 4 wanted to raise. What I was saying during Quant Box is it's kind of probably about 50-50, which I think the 5 members said it had to do with that big CPI that we had the other day. Core was way down, like a full percentage point down. Okay? The committee also wants to continue quantitative tightening. The average interest rate over the next 3 years will be 5.5. Over the next 3 years, the average will be 5.5. This is the kind of stuff that the media misses. Okay? The MPC's August most likely, or modal, we'll call it average, median, projection. The MPC's projection, okay, averaged just under, sorry, I said over, I think last time, just under 5.5% over the next 3 years. The average of 5.5, and it's 5.25. Kind of seems like they're going to have to raise interest rates at least one more time and then leave it there for 3 years, or raise it higher, then leave it for a couple of years and then cut. Okay? CPI inflation was expected to return to 2% by 2025 Q2. Woo, okay? Not 2024, not 2023. So this year's 2023. Then all of next year, 2024, not in the first quarter. So by, let's say, June 2025, or do you want to say March or April? April, I guess. April. CPI April. It's a long ways off. Yeah, Richard, it blows my mind that that's how Europeans do their mortgages. They do them like commercial real estate. I really don't understand it. And that's a true ignorance. Like maybe you can't get a 30-year mortgage. So maybe it's of no fault of anyone's. But money was nearly free for a very long time. So to get a variable mortgage, what are you trying to do? Get it a little bit cheaper than free? Well, that's ridiculous. It's free. So when money was free, I borrowed as much as I could. So like in the United States, a mortgage was about 3.5. The stock market's going up 20% a year. So get that free money. So I have that free money now for 30 years. The cost of money has doubled. So I got money for half price. Sweet. And it will remain half price, the same price, my 3% price, for 30 years. It's incredible. It didn't seem like it was incredible then, but that's why you lock it in. Because what, is it going to get cheaper than free? No. Okay. So anyways, so it blows my mind to get a 5-year or a 2-year variable mortgage. That means all you get is the risk that your free money gets more expensive. Like, think of it that way. What's the likelihood money is going to go from free? And we're talking mortgages here. What's the likelihood the bank is going to pay you money? None. So, right? So if the baseline of money is 0 and a mortgage is 3, then there's a 3% spread. Okay? And really, though, the banks don't get their money for free. They have to pay a little bit. And so anyway, so really the spread is even smaller. Okay, great. But what's the likelihood money goes to negative interest rates? It's not supposed to, right? And therefore, mortgages get close to being 0. Well, that's not likely. So when you're nearly free, when you're looking at 3%, your risk is that it'll go to 4%, 5%, 6%. It can go to 10%, 20%. It's not going to go to 0. That doesn't make any sense. So your risk is interest rates go up. So you would lock in forever, wouldn't you? That's what I would do and did, and what I recommended. So I'm dumbfounded by the idea like, well, I'll take the risk because I might save 0.25% on my mortgage. Okay. Well, Cherokee, yeah. Well, no, but I guess what you're missing, Cherokee, is a couple of years ago we were talking about this, and like the thing to do now is to lock that in forever because the free money is going away. So maybe you're missing that part, Cherokee. It's not that part. I'm not bragging about that. What I'm saying is, it's just money, and you should understand money. And in that moment when money was free, I don't understand the logic of having a variable mortgage. That's what I'm talking about. It doesn't make sense. Now, I know at the time it might have been 0.25% or 0.5% cheaper. That's why you do it. So you can, but it's negligible relative to the risk. And we knew COVID was a problem. So you're like, I literally declared, now is the time. You have to do something. I was right. I've had over the 20 years of me doing these live streams and stuff, there are many times, not many, there are several times when I'm like, this is a freak out moment. This is a freak out moment. And the end of free money is near. You must get as much of it and lock it in forever. And you will never see it again. No, that's cool, Cherokee. But you're making a point. I got to make sure, right? I got to make sure my message is clear. And so now money will never likely become cheap again. And so I don't understand that variable mortgage when it's already so there you only have risk. I don't see any real upside. But maybe in the UK you can't do a 30-year mortgage. Say, I don't know. I've never owned real estate in the UK. So maybe I don't know these things. And then you're like, well, dude, they just don't offer them. Okay. I think I actually don't like owning a home. I don't actually like it, but I do own my own home. Great. Would I always recommend it to people? No. But the one thing I know, one benefit of owning your own home, is I know what my cost of living will be when it comes to shelter. I know what it'll cost 25 years from now. I know exactly what my cost of living is going to be. Now, the cost of living outside of shelter will probably rise. Prices always rise. So if, unless there's a zombie apocalypse and the end of capitalism and all that kind of stuff, I'm assuming we just continue with our ever-changing but normal world. And one of the things that will likely continue over that 25-year period is the economy will expand, the dollar will weaken, inflation, obviously, according to what we have now, will stay relatively high, even if it's only growing at 2% again, and GDP is growing at 2%. Well, still, you got growth, you got cost, and 25 years from now, a $10 steak might be a $30 steak. It'd be normal for you to go to the grocery store and spend $800. And, old people say, I remember when I would go to the grocery store and only spend $100, You get one, a bottle of wine is going to be $100. You're like, I remember when it was, I used to buy a $2 chuck. Now it's 100, right? And all of a sudden you have all these costs, in particular with food. Do you remember like when a pickup truck was cheap? You're like, oh, I bought a brand new Ford F-150 for $27,000. Now that's $75,000. You're right. So all these things will go up in value, but not the cost of my shelter. It's stability. And if you rent, you don't know what your rent is going to be in 25 years. And if you own a house, but you have a 5-year mortgage, you don't know what your mortgage is going to be in 5 years. So I don't even understand why you would do it. You see? That's the point I'm trying to make, Cherokee. Like, I don't understand. It doesn't make any logical sense to have a 5-year variable mortgage. It doesn't provide any long-term benefit. It only exposes you to long-term risk. It's strange to me. So that was my take on that. And think of the peace and calmness of knowing exactly what my shelter will cost me 25 years from now, and it'll be cheap relative to everybody else 25 years from now. I also know to the penny what I'll owe, so, and then I'll owe nothing. And it's all planned and predictable and calm and peaceful, and I don't have any risk with that. It's great. Now, Kevin says taxes. Yeah. You don't know what taxes are going to be. So there's other types of tax games you can play. And like you can't change your house tax, but you can change other types of, taxes. So there are tax strategies, that you can do. Okay. Anyways, going back to this, UK GDP down 0.5%. The bank staff now expect GDP to rise only slightly. Okay, remember they're trying to stay above zero. So maybe they go to 0.2. Underlying growth for the whole second half, weaker. So this is you have to start putting these things together. Interest rates will go up, is what they're saying. And not by much, and are likely to stay there. So this is the higher for longer. So they'll have to go up higher than they are now. Again, 5.25, and the 3-year average is 5.5. So interest rates have to go up 1 or 2 more times, and then stay there for 3 years with one sort of cut at the 1 or 2 cuts by the end of 3 years. So let's say, up 2 more times, and then pause for 1.5 years, and then some cuts. Okay? And the issue is they could probably raise more than that, but if they have falling GDP and they're only at 0.1, if they ever drop below and go negative GDP, then they're stuck. They can't raise anymore. You see? Stingray says Costco trip is $500. Yeah, that we canceled our memberships at Costco and Sam's Club because of that. See, with the potential of a recession, this was like the family financial planning, if you will. A year ago, I thought there was a pretty decent chance of recession in the United States. So you cut expenses. And one of the things we did was cancel those memberships. Because it does happen. You go to Costco and you can come home with $100 more worth of stuff than you actually planned for. And you're like, Wayne, have some discipline. Oh yeah, I understand, but that's the reality. And you know, it's interesting, there's a study that shows that the bigger the shopping cart, the more you buy. The same thing, the bigger your plate, the more food you eat. So anyways, yeah. So if we were going to go into a bad year, spend less, save more. CPI inflation is expected to fall significantly in the near term, reflecting lower annual energy inflation. What? Uh-huh. Now, they might be wrong. I know they look at core, but I would not be shocked if we have that we have very expensive oil for a very long time. We can't play our dirty little tricks this year. Last year, the United States flooded the market with oil, screwed over Saudi Arabia. And guess what? Saudi Arabia doesn't like us. And we don't have oil anymore, so we can't do that trick. At the time, I said, it's kind of illegal. There are laws at the WTO, the World Trade Organization, that prevent companies and or countries from using a practice called dumping. So, for example, it would be illegal for China to produce a bunch of steel to keep all its workers employed. Then there would be this surplus of steel that nobody needs. So then China dumps it on the world market and sells it for cheap, which puts the United States steel workers out of job and Indian steel workers out of job. So to the benefit of Chinese workers, but to the detriment of American and British, right? Like in, it's not Manchester, it's Birmingham, I think, makes steel in the UK. And India is a big producer, right? And so jobs are lost everywhere else. Well, that's illegal. So oil prices went to 120. And what I was saying at the time before we tapped the SPR, I said, well, the solution here are the high prices. In a capitalist economy, the high prices promote entrepreneurialism. It says, dude, if you can find a way to get us some oil, we will make you filthy, stinking rich. That's how entrepreneurialism works. You solve our desperate problem, and you will be handsomely rewarded by society. So go get some oil. Boy, I started drilling. or find a better technology. Like fracking was a solution to high prices. Well, let's go back to old wells and suck some more leftover residual oil out of the rock. We sucked out all this liquid stuff out of the ground, like a lake, an underground lake of liquid oil. That happens. And so you suck the well dry and that's it, right? No. There's oil in the solid rock. It's trapped inside the rock. So someone came along and said, well, we have to figure out how to drill horizontally. Thank you to Devon Energy. And by the way, I've known Devon Energy my entire life. It's just outside of Edmonton, Alberta. Devon Energy said, well, we'll figure out how to turn the drill. So it'll drill not just straight down, but then sideways, because you need to do that. Well, that takes a lot of science and a lot of research and a lot of practice and a lot of failure and a lot of adjustment. 20 years later, you have this new technology that can get oil. So if solved a problem, you should be rewarded for that. So anyway, after COVID, there was a shortage of oil. Oil prices went high, and entrepreneurs are supposed to solve this problem. Instead, the government solved it for us by, what I would argue, illegally dumping oil that was supposed to be saved for a rainy day or for the military during a crisis like an enemy invading our land, that we have energy. It's important. Ask Germany. I think the major reason Germany lost World War II is they ran out of oil and gas. Think about the history of World War II. Where did all the big battles happen at first, before the Americans were even in the war? Yes, America, there was a World War II before America entered. So where did the British fight the Germans? North Africa, places like Libya. Why? Oil. Then the Germans were kicked out of North Africa. Where were the next big battles? Stalingrad, which is right smack dab in the center of the road to Baku. What's in Baku, Azerbaijan? Oil. Why was Hitler so stupid to attack Russia? Well, they had oil. Like, it doesn't make sense. Why would you start a war on two fronts? They needed oil. Okay? So anyway, we have this strategic petroleum reserve. It's really to combat OPEC is one of the major reasons. So there's something called the IEA, and this is to balance OPEC. So these countries here have agreed, okay? These countries here have agreed to keep some oil in supply. Okay? I'm looking at the dots, the blue dots, okay? These countries here have oil put aside in case OPEC decides to stop producing oil or stop sending it to some partners. So like if Saudi Arabia says, we're just not going to sell oil to the United States. Okay? Weaponization of energy. It's happened before, and that's why the IEA was created. So these countries keep some oil in supply, and if energy is weaponized by OPEC, which is a cartel, then this cartel can contribute their oil to each other. And so all these countries with blue dots might be able to provide some money to or oil supply to those that don't have oil, that because of the weaponization. So the UK and Canada can use their SPR to help out America if America gets banned or something, right? Well, here's the thing. Last year, oil prices went to 120. And instead of letting entrepreneurialism fix it, the government dumped their SPR, pissing off OPEC. And now OPEC is not happy with America. And they've actually cut their production by 1 million barrels a day. And now oil prices are going back up. And there's nothing that the American government can do about it now. But we're now incredibly vulnerable. Not to OPEC, but yeah. But what if there's a hurricane that takes out production, goes right into Texas and Louisiana, just mows it over? Devastation to the oil-producing regions of the United States. Now we got nothing in reserve. We can't produce anything on our own. If that happens, holy schnicker-schnacker. Oil goes to $200 a barrel, and the U.S. economy completely collapses. Andrew, have you taken the energy course at Investor Bootcamp? There's a whole lecture on, shooting fields. Yeah, I really enjoyed it, yeah. Oh, I forgot to mention, I'm going to start a stock trading course at Investor Bootcamp. Yeah. I'm going to price it in the neighborhood of $199. I imagine it's going to be 12 hours. And that will then lead into a portfolio construction and management course, which would probably be, 6 hours, 8 hours, 10 hours, 12 hours. So there's a lot to do between now and the end of the year. It'll probably take longer than that to do both courses. How many people are interested? Again, I'll say a 12-hour, I'm guessing, I have no idea, 12-hour course on trading stocks. One? All right, me and Emmanuel. Remember, we're going to have to not only look at like stocks and bonds and options. We're going to have to do things like, valuation and pricing ratios, right? So like, we're going to have to look at like business cycles. Oh yeah, market open. Is it? Yeah. Yeah. All right. Thank you. Yeah. Roger's in. What's up, Roger? Dre's in. Anybody else? That's it? Yeah, well, I'm doing good, man. Yeah, so like I hire someone, he has a PhD in economics. In particular, his focus is data visualization. And so the money you put in, I pay to him. So that I draft everything out. Sometimes it's literally just a pen and a paper, and I spend a few hours and I'll write out a whole lecture. Right? Right? Handwrite it. Because I'm thinking as I go, okay, I want to do this, I want to do that. And then I hand it to him, and he spends many hours producing the slide deck. And, you know, when you see like what we did with the oil trading course, he must have worked, like, I don't think 100 hours would be enough. That's how much time we put into these courses, right? So that's where the money goes, by the way. You're like, Wayne, why don't you just do it for free? Well, it costs me a lot of money, and it takes a lot of my time, but the money goes to him. Okay, so yeah. So that's why I want to know, if you don't care, I got stuff to do. Right? If you don't care, I don't need to do it. If you care, then hell yeah, let's do it. But I need to start like now. Right? So that'll be something I work on today, tomorrow, over the weekend. I'm going to start pulling all the strings to get him involved again. And I'll start the first outlines and the first lectures. We'll need to schedule it, right? Maybe every Wednesday. Maybe we need to do 2 a week, although that's really hard. To do 2 a week, he almost becomes a full-time employee, right? 40 hours a week just doing 2 lectures. But nonetheless, I want to know if you care and that we should get going on this immediately. Right? Is that right, Richard? Cool. Well, I can't find any decent inspiration, so I'm just going to create the entire thing from scratch, from thought. Okay. All right. Let's review your trade plans. Tradeplans.ai. I almost forgot. Where did it go? Where is it? Is it here? There it is. All right, I'll get rid of that. I'll let you read the MPC report. Let me. Where did you guys go? There you are. Okay, there's the PDF. I'm going to moveon.com. All right. Well, I hope you've posted your trade plan. Let's take a look. Let me get my drawing tool. So notice when you post your trade plan, well, actually, let me mark this. Hang on. Add stream marker, create a highlight video. Let's do that. Let's see if I can do it, what this does. Oh, you do it after the fact. All right. Really? Hang on. Let me see how I do this. Do you have to go backwards? Duration 5 minutes? All right, interesting. Well, I'll at least mark it, and then maybe I can grab this and do it all at once. That'd be great. All right, so here we are, tradeplans.ai, and I'm going to review trade plans posted by members. By the way, there's no fee, there's no advertising, there's no email marketing sent to you. There's absolutely no monetization on this website at all, which is funny because YouTube just told me they're going to put an ad in the stream. I'm going to skip it. Okay, there we go. All right. So anyway, so the other thing is when you post a trade plan, it's completely anonymous. There's nothing on these trade plans that show a user ID, a name, an image, all that kind of stuff. It's completely anonymous. So anyways, let's get on with it. This trader is buying Euro Swissy. Let's take a look. I can zoom in. Let's see. They're buying Euro Swissy. They're using pivot points. That looks like an R. So the S, they have in this down, up, down. So it's down. Wait, this is Swissy yen. Wait. Euro Swissy, Swissy yen. Well, I have to disagree with that. Well, let me try to ignore it. Okay, so they put the wrong image in, but nonetheless, let me try it. Okay, Swissy yen. This way, this way, this way, this way, down, up. Okay, I don't agree with it because this top suggests this bottom, and they have it reversing before that. These are monthly. Swissy, I'm a bear on, and yen I'm a bear on. And I mean, Swissy could, but the policy right now at Swiss National Bank is to not raise, and they won't raise. And Japan actually might raise interest rates later to 0, but not by the end of the year. But if they did, that would bring this down anyway. So the bottom line, I don't like it fundamentally. I don't like it technically. And if I was going to, because also I'm a trend trader, I'm going to expect that this trend just technically is going to continue, is how I'm going to look at that. So I'm going to go back to what I was going to say first, and no, I disagree with that. All right. All right, this trader is buying the Dow. Let's take a look. Buying the Dow. All right. No, that's too much of a zoom. All right. Let's see. Buying the Dow. Well, we have, oops, let's do this in a different color. We have up, resistance, down, support, up, resistance, down, support. Then we get locked into this range. Okay, and what are they doing? They're buying what? Buying the Dow. Well, I'm sticking to this technically. I'm not going to comment fundamentally because that's my opinion, but I'm going to look at this as a lower low. And in a lower low situation, no, I would expect more down. I mean, I want it to go up, that's for sure. But like, I'm trying to keep this to what the chart says, not what my opinion is. Technical analysis, like, it looks like there could be like down to here and then up. But I don't see a reversal pattern at support. Okay, I don't see a reversal pattern here. And therefore Fibonacci and then bring it down maybe to this level. So no. After a lower low, after a breach of support, buying because of that? No, I'm going to disagree. It's all right. I might agree with it strategically, but tactically, no. All right, let's take a look at the S&P 500. Very bearish. Oh, I forgot to look. Just confirm it. Sell. Okay, sell the S&P 500. Well, I'm trying to mark this up. So I'm going to make this a straight across. And then there's this one, right, which we already have. So down to up. I'm trying to take my emotion out of it as much as possible. So what are we looking at here? M3 to M1. I know that's unseasonable for that to happen, but will this happen? The big thing is, like, does this create a double bottom? I wonder what that is. I might have to check that. Hang on. But anyways, yeah, well, it's a maybe, and of course I can't pick that. So the issue that I have with it, like the trade plan is valid, okay, but this could create a double bottom, you see? And what this chart says is M3 to there. Then, you know, I see this happening though too, right? So I suppose I don't have enough information to disagree, because it could do this and then maybe start heading up. But that double bottom is going to be tricky. But okay, I'm going to agree with it, but I'm on the fence. But of course, emotionally, I want it to go up, so maybe that's just me. My phone is freaking out. What is going on there? Oh, someone's at my front door? Is that what someone was calling me maybe? Hang on. Gotta look at my front door. All right, I gotta go. This guy's actually walking around my yard now. All right, I gotta go. There's some guy walking around my front yard. So, and I don't know him. So anyways, let's do this some more tomorrow. If you're in my day trading group or my swing trading group, we're meeting at 4 o'clock this afternoon. So I'll see you then. Peace on earth. May the pips be with you. May our profits be above average. Cheers.